Echoes of the credit practices that sparked the financial crisis nearly 6 years ago could be coming down the road. Subprime lending is hot again, but instead of home mortgages, now the loans are being handled out to car buyers. Subprime borrowers are the least creditworthy and often the most vulnerable to predatory practices. CBS News business analyst Jill Schlesinger is here with what's at stake. Jill, good morning.
Good morning.
So is this going to be another lending bubble?
Well, it sort of feels that way. We've seen subprime auto loans increase by 130% in the last 5 years. So really soaring. We're talking about loans to people who have credit scores at or below 640. And what we've seen, though, is we're not back to the peak. In 2006, 36% of all auto loans were subprime. It went down to 20%. Now we're up to 27%. So it seems like a big increase, but we're not back to the peak. I should also note there's a big issue here, and that is that the mortgage market, that could potentially bring down the whole system. The auto loan market, definitely not the same kind of risk. It's a fraction of the impact on the overall economy.
So what happens to people who accept a loan, who make a loan, and the people who get the loan knowing they can't pay it? What happens to them?
Well, you know, it's not clear that we know that there are loans being extended to people who can't pay. What usually happens is the borrower, what you do is you look at the monthly loan amount. You say, how much am I paying month to month? And you think you can do it, but then something bad happens and you can't do it. What's interesting is very different than the mortgage market, where if someone is delinquent, it takes a long time to get the house and sell the house and go into foreclosure. With auto loans, these lenders can literally automatically shut down your ignition, repossess the car, take it back. In some cases, the lenders are going after these borrowers for the unpaid amounts.
So is there any regulation from the government on this kind of stuff?
This is a kind of a thorny issue. When you look at the Dodd-Frank reform, remember it created the Consumer Protection Financial Bureau, right? And the CFPB was tasked with protecting consumers. But in an amendment to Dodd-Frank, these auto loans were actually pulled out of the CFP's purview. That's a shame. CFPB has done a very good job rulemaking. It's now under the FTC, and it hasn't been as strenuously policed as perhaps it would have been under a different organization.
How do you make sure you're not going to be the victim of this predatory lending?
Well, what you really have to do is you've got to get information. You've got to say, what is the total amount of the loan? You want to say, what is the interest rate of this loan? You want to know, what are any extras that I could be paying for? Some people are buying insurance and maybe they don't realize it. Don't get caught in a monthly payment trap. You've got to look at the overall level of this debt and make sure that you can afford it.
Read the fine print.
Oh, yeah.
Jill Schlesinger, thank you. It's always good to see you.